Australia is one of the world's wealthiest nations. At every farm, every mine, and every service it runs, that annual total reaches roughly $1.75 trillion. SpaceX is asking for exactly that as its public market valuation. Not to build a rocket or launch a new satellite, just to buy a piece of what already exists. The largest initial public offering in history would rank SpaceX above every public company on Earth except three. Apple, Microsoft, and Nvidia would be its only equals, but SpaceX generated $16 billion in revenue last year. Its asking price is roughly 100 times that figure. By any conventional measure, that multiple is impossible to justify. Yet some of the smartest institutional money in the world is lining up. So the real question isn't whether this number is enormous. It's whether any of it actually makes sense. Before we can answer that, we need to understand what SpaceX actually sells. Think of it as two separate businesses operating under one name. The first is launch services. SpaceX carries cargo, satellites, and astronauts to orbit aboard Falcon rockets. Governments and corporations pay well for reliable rides to space. This business is genuinely impressive and profitable. But it isn't what's driving the trillion-dollar debate. The second is Starlink. SpaceX has built a constellation of over 7,000 satellites. Those satellites beam internet access to subscribers below. Picture a wireless internet provider whose towers float in orbit. Starlink crossed $10 billion in annual revenue recently. Its operating profit reached roughly $5.8 billion. Those margins look more like software than aerospace. This is the piece of SpaceX investors can value with real confidence. Starlink alone could be worth $400 to $600 billion. That still leaves over $1 trillion of valuation unexplained. In early February, SpaceX did something that changes the entire story. It absorbed xAI, Elon Musk's artificial intelligence company, in an all-stock deal. xAI carried a $250 billion valuation. The combined entity was instantly worth $1.25 trillion. That deal closed just weeks before the IPO paperwork began. Anyone buying SpaceX shares will now co-own a frontier AI company. No precedent for this combination exists in financial markets. The stated goal is orbital computing. Picture massive data centers floating in space, powered by perpetual sunlight. They'd be cooled by the vacuum surrounding them. Starlink satellites would connect them to the Earth below. SpaceX argues no competitor can replicate this from the ground. That vision pushed the IPO target to $1.75 trillion. But investors are being asked to underwrite three distinct businesses simultaneously. Regulators want clarity on how xAI appears in the SEC filing. One more detail separates this offering from every major IPO before it. The retail allocation is reportedly 30%. Wall Street's typical standard is about 10%. This decision isn't generosity toward everyday investors. It's a calculated strategy rooted in what happened with Tesla. The investors who made Tesla a market phenomenon were retail investors. They held through enormous volatility because they believed in the mission. SpaceX is trying to build that same loyal foundation. For the CEO, this also represents a strategic shift within his corporate empire. Tesla has long been the publicly traded center of his holdings. SpaceX, now approaching a larger valuation, is poised to replace that role. But loyalty doesn't protect anyone from an overpriced stock. At this valuation, shares need exceptional long-term performance to justify today's price. SpaceX's controlling shareholder keeps full decision-making authority after the listing. The ordinary investor gets economic exposure, not meaningful power. Here is the honest version of the Wall Street debate. Can SpaceX grow into a $1.75 trillion valuation? Sometimes the answer is yes. Amazon looked absurdly overpriced for an entire decade. Then cloud computing arrived and justified every dollar. Nvidia looked expensive before AI demand made it irreplaceable. The question is whether Starlink, Starship, and orbital AI can do the same. That counterargument is also serious. Starship is not yet a commercial product. Building orbital data centers requires technology that doesn't yet exist at scale. The xAI integration raises regulatory questions still being resolved. Meanwhile, xAI is currently losing money at a significant rate. This valuation is a bet on decades of future success. It isn't necessarily wrong to make that bet. But it is worth being clear about what you're actually paying for. If everything works exactly as planned, what does SpaceX ultimately become? And if only half of it does, is half of this vision still worth owning at today's price? For more economics, business, and finance, minus the boring parts, check out our other videos.